Investing in startups, first and foremost, it's the most riskiest thing you could do. You should only invest money that you can afford to lose. So we've done 41 investments.
41.
Look, I need you. I need you to be my coconut. And I said, well, does that mean I'm brown and hairy on the outside and white on the inside?
আমাদের আজকের গেস্ট নির্ঝর রহমান ভাই। উনি হচ্ছেন সিইও অফ বাংলাদেশ এঞ্জেল নেটওয়ার্ক। এঞ্জেল ইনভেস্টিং খুব সহজ ভাষায় ধনী ব্যক্তিরা স্টার্টআপদেরকে যখন টাকা দেয়, প্রথম চেকটা ইউজুয়ালি হয়, এটাকে বলে এঞ্জেল ইনভেস্টিং। ওনারা পৃথিবীর একটা সব আনাচে কানাচেতে বাংলাদেশি যারা আছে ধনী ব্যক্তি, তাদেরকে কানেক্ট করেছে বাংলাদেশি স্টার্টআপসে ইনভেস্ট করার জন্য একটা প্রপার প্ল্যাটফর্ম তৈরি করে দিয়েছে। সো ফার দে হ্যাভ ডান 41টা ডিলস, উইচ ইজ অ্যামেজিং। 41টা কোম্পানি সোফার টাকা পেয়েছে এঞ্জেল নেটওয়ার্কের থ্রুতে। অ্যান্ড এই এপিসোডে আমরা ওনাকে জিজ্ঞেস করেছি কোন কোন ফ্যাক্টরগুলো ওনারা বিবেচনা করে একটা কোম্পানিকে টাকা দেওয়ার সময়। সো আমি যদি একটা ফাইনাল ইয়ার ইউনিভার্সিটি স্টুডেন্ট হই, আমার প্রতি তার অ্যাডভাইস কী হবে যদি আমি এন্টারপ্রেনারশিপে যেতে চাই এবং বাংলাদেশ এঞ্জেল নেটওয়ার্ক থেকে টাকা তুলতে চাই, স্টেপ বাই স্টেপ কী কী করা উচিত, এরকম স্টেপ বাই স্টেপ কথাবার্তা আমরা বলেছি, যেটা আশা করছি অনেকজনের জন্য হেল্পফুল হবে। সো এরকম এন্টারপ্রেনার টাকা রেজ করতে চাই, কী করব, বাংলাদেশ ইন জেনারেল ইনভেস্টমেন্ট সিনটা কী অবস্থা, স্পেসিফিক স্টার্টআপ যেগুলো সাকসেসফুল হয়েছে কেন সাকসেসফুল হয়েছে, এরকম অনেক ইন্টারেস্টিং স্টার্টআপ এবং ইনভেস্টমেন্ট নিয়ে আলোচনা করেছি আমরা। আশা করি আপনাদের জন্য শিক্ষণীয় একটা বিষয় হবে। একটা জিনিস বলে রাখি, এই পুরো পডকাস্টটা ইংলিশে হয়েছে। এটাতে আমাদের গেস্ট সবচেয়ে বেশি কমফোর্টেবল ছিল অ্যান্ড উই শুড রেসপেক্ট দ্যাট। হাউএভার আমি চেষ্টা করব বাই দ্য টাইম এটা আমি রিলিজ করছি সাবটাইটেল, বাংলা সাবটাইটেল অ্যাড করার। যদি করতে পারি তাহলে তো খুব ভালো, যদি না করতে পারি ক্ষমা করে দিবেন। আমি চেষ্টা করব আপনাদের জন্য আরও বাংলা কন্টেন্ট এই টপিক নিয়ে বানানোর, যদি আপনারা ইন্টারেস্টেড হন। যাই হোক, কমেন্ট সেকশনে জানাবেন কোন জিনিসগুলো ভালো লেগেছে, খারাপ লেগেছে, বা কোনো কমেন্টস থাকলে প্লিজ জানাবেন। লাইক, শেয়ার, সাবস্ক্রাইব করে পডকাস্টটা আরও মানুষের কাছে পৌঁছে দিতে হেল্প করবেন। অ্যান্ড আশা করি আপনাদের অনেক ইউজফুল মনে হবে এই এপিসোডটা। আপনি কি ভিডিও বাদ দিয়ে শুধু অডিওতে পডকাস্টটা শুনতে যাচ্ছেন? সেক্ষেত্রে গুড নিউজ ফর ইউ, পডকাস্টটা এখন অডিও এক্সপিরিয়েন্সে অ্যাভেলেবল। এই ডিসক্রিপশনে লিঙ্ক দেওয়া আছে anchor.fm এর। খুবই শীঘ্রই আমরা গুগল পডকাস্ট, স্পটিফাই, অ্যাপল পডকাস্ট সকল প্ল্যাটফর্মে চলে আসবো, বাট তার আগে anchor.fm এর লিঙ্ক দেওয়া আছে। সো এনজয় দ্য পডকাস্ট, লেট মি নো হাউ ইউ লাইক ইট। অডিও অনলি প্ল্যাটফর্মে আমরা প্রথমবারের মতো আসছি। সো শো আস সাম লাভ, সাপোর্ট, লাইক, সাবস্ক্রাইব যা আছে সব করেন অ্যান্ড এনজয়। Nirjhor bhai, thank you so much for coming to our little show. It's been so long that I wanted you to come on and talk to us about investments, startups, and all things tech. But before anything else, we ask every single guest to please introduce themselves. Could you please kick us off by introducing yourself?
My name is Nirjhor Rahman. I'm the CEO of Bangladesh Angels.
Enough said.
Yeah.
Enough said. Okay, so I've done some digging. It looks like you were born in Bangladesh. You then grew up for some time in Tokyo. Then you went to the USA in Texas, where you spent your formative years. Then somehow you ended up in Mongolia.
Mm-hmm.
Could you walk us through how you went from being born in Bangladesh to going to all of these places to spending a winter in Mongolia?
Couple winters. And you remember that because Mongolia is the coldest, or at least Ulaanbaatar, which means Red Hero, is the coldest capital in the world. But yeah, my story was, I was born in Bangladesh, right outside Dhaka in Gajipur. My family was involved, particularly my father, in the agricultural research space. So he was a scientist with Bari, Kishigovashana, as they say. And so was a few of my family members. So I was born there. And then I think this was a very common thing in the 90s in Bangladesh. He got a scholarship to go to Japan. So he did his master's, PhD, and so that's where I kind of spent my formative years in Kyoto mostly. So my father was studying, and then my sister was born there. And then in the early 2000s, we moved to the U.S. Once again for my father's job, and then we ended up settling in Texas. The thing with Mongolia was sort of a lot of kind of roundabout way where I always grew up wanting to see the world. Ironically, despite being an immigrant kid, I wanted to see the world. I studied international relations. I went into consulting in the beginning of my career, but then I kind of knew I didn't want to do that. I wanted to work in emerging markets. I worked a little bit in Kenya. And then Mongolia was kind of an extension of that because I knew a few people. They were, and they knew of my interest to work in Asia in my early 20s. And so they said, oh, why don't you just show up and come work with this company in Mongolia, which was doing investments.
Okay.
So they were almost like the big Simco of Mongolia. Like they owned a lot of energy assets, but they want to invest in different types of businesses, and they wanted the help of foreigners like me to figure that out. So I went there. It was a very interesting experience because in many ways, I think Mongolia is literally the polar opposite of Bangladesh. So if Bangladesh is plus 30 degrees Celsius for most of the year, Mongolia is minus 30 for most of the year, right? If Bangladesh has 160 million people in an area that's the size of, I guess, New Jersey or not New Jersey, sorry, New York State or Iowa or whatever, Mongolia is 2 million people in an area twice the size of France. So it's one of the least populated, least dense countries in the world. And another interesting kind of facet was Mongolia was a country that had a lot of mineral resources, and they were next to China. So their path to growth was based on digging these resources and becoming the next Saudi Arabia or Dubai, but with mineral resources, right? Coal, gold, copper, you name it, right? And then Bangladesh was obviously very different. But I think my impetus to come back to Bangladesh was in 2013. I was in the middle, so I came in one winter, I left in another winter. But I was in the middle of summer in Mongolia, which is quite nice. But then what ended up happening in 2013, a few things happened, like Shabag was happening and other things were happening. But then Rana Plaza happened. And so Bangladesh was in the news for all the wrong reasons. And
so, just for the uninitiated, what happened with
Rana Plaza, right? So Rana Plaza was a big factory collapse. I think in the matter of seconds and minutes and hours, a few thousand people died. It was an international story, and obviously it ties in with this narrative around the world that Bangladesh is a country where there's poverty and there's exploitation and there's all these general chaos, right? So I was kind of watching the news from Mongolia, and I said, okay, well, one, Mongolia is very cold. Second, although it's a very interesting country, but what I saw for myself was I didn't want to be a traveler. I wanted to come back to one country or come to one country and build things over time. And so then I kind of made this realization that maybe I shouldn't go to Mongolia, or I shouldn't go to the next country that I wanted to go to. Maybe what I should do is I should try to come back to Bangladesh. And that was kind of the only motivation. Like I didn't know anything about the country. I didn't come back for almost 20 years, barely spoke the language. But I was very lucky. I found a few, once again, mentors, people I talked to over LinkedIn and Skype, and I told them about my motivation to come back to Bangladesh. And somebody I knew, he was based in the States, but he had an opportunity where he said, look, the Bill and Melinda Gates Foundation gave my company some money to start social businesses in sanitation, and one of those countries is Bangladesh. And so you speak Bangla, right? I was like, yeah, I do. Okay, like you know the country. I was like, yeah, I kind of do. Like, yeah, okay, like you can make this happen. I was like, yeah, I think so. And then he said, look, I need you to be my coconut. And I said, well, does that mean I'm brown and hairy on the outside and white on the inside? He's like, yeah, that's exactly right. And I said, okay, well, first of all, F yourself. But thank you for the opportunity. So that's how I came back in 2014.
And during this time, if we kind of thought about your skill set, like what area were you working in, and what would you say your skill set was? Was it finance or what?
Yeah. So, I mean, my academic training was international relations. So what that really means is, my hard skill set, if there was any, was reading The Economist and talking about it intelligently. Like, that was kind of it, right? Like, so I don't know how much I got out of that, but I think my sort of more specific skill set was, I worked for this consulting firm, so I knew how to kind of attack problems and figure out certain solutions, at least on paper, and then present them in a way, right? And then back that up with certain kind of figures and metrics and put them into a financial model, essentially kind of design business models, right? And that's a lot of what I did in Bangladesh, in Mongolia. Whether it's in agriculture or warehousing or logistics, or I also worked on like a wind kind of project. So that, I think the company that hired me, it was actually an NGO called Water and Sanitation for the Urban Poor. But I think that's something they appreciated, is that, hey, here's a guy who can go to a random country. He could kind of get this very blank canvas and figure out what can be done, right? And so that was I think that was what attracted them to me, and then vice versa, right?
Got it. So we're going to skip a few steps here and just dive into what you're doing right now, which is Bangladesh Angels Network, right? You're the CEO. I want to kind of understand how did BAN come to be, and then we'll take it from there.
Sure. So I did the sanitation thing, made a lot of mistakes, but the model that we did create, I think I checked, is in 13 cities. So it was a very good experience, right? In building a sanitation business model called Sweep.
Okay.
And also getting some impact funds from it. And then what I did was I worked with a local conglomerate called Impress Group. They were the owners of Channel I and SEPTA. They were trying to do a social business program under their umbrella called Build Bangladesh. And so they had an Australian partner. So I was kind of leading that up and worked with grassroots entrepreneurs from around the country. And this is around 2018. So the whole kind of, and you guys were, coming up. I was, using Pathao. I was a big fan. So there was this kind of startup ecosystem that was brewing, and, things were getting very exciting. But one thing that I think these entrepreneurs told me is, it's really great that you're giving me training, you're trying to give me inspiration, but what I really need is capital. And a few $1,000s doesn't make the difference. Hundreds of thousands of dollars would make a difference, right? Crores of Dhaka, right? And so that was my question, how to do that. And then, I really admired what Build Bangladesh was trying to do with their program, and obviously, their ethos of, hey, it was 5 guys or 5 friends who started in a table and built one of the biggest companies in the country. But I felt like, hey, what if we did this with 500 people like that? Right, people who built businesses, but how do we help the next generation transfer not just capital but also knowledge, right? To be able to build kind of sustainable and potentially transformative companies in the country. So I was thinking all these things, but there were a few people who were already ahead of me. So there were people like Avishkar, which is an Indian impact investor, but they have a fund for Bangladesh. So their specific challenge was they were trying to invest $2 million, $3 million in a market where a lot of entrepreneurs are asking for $150,000, $200,000. This is 5 or 6 years ago. Obviously, it's very different now, right? But so they felt that there was a gap here, that maybe local capital can fill the gap, right? And they had worked with Indian angels, Sri Lankan angels, so they knew that angel networks could work, right? And so that was kind of their idea. But then alongside, you had people like Minhaj Anwar of Better Stories, who's been doing this for a very long time. When I think he was trying to do things in investments. Samad Mirali Bhai from Startup Dhaka. He was moving towards venture capital with IDLC, but he had done a lot of angel investments, and he saw the problems of trying to scale that. Tina Jabin, who was back then the CEO of Startup Bangladesh, trying to start their own VC fund. Sajid Rahman, who's probably the most famous angel investor from Bangladesh. He's obviously been part of and has his own syndicate around the world. Anita Apu, who's Anita Ghazi Rahman, who's involved with Legal Circle as a lawyer to startups, etc. So all these people kind of came together and said, look, I think to really organize the early stage startup investing kind of ecosystem, what Bangladesh was lacking compared to other markets was an angel network. And so they kind of put the concept together. They got some money for it from the Dutch government, and what they needed was a CEO. And so I was lucky enough in the fact that, and I found the right people at the right time, or vice versa, right? Where I was motivated to do something like this. I was looking for a platform like this, and then I guess they saw that I had the skill sets to potentially do it.
So that was in 2018?
That was 2018, yeah. Okay. We launched at the very end of 2018.
So in 2018, you're all of you are putting together this fund. You are now the CEO. What was the opportunity in front of you? And two questions really. What was the opportunity that you guys saw in 2018 with Bangladesh Angels Network? And number 2, could you indulge us, treat us like a 5-year-old, and tell us how this whole VC investment game works? But start with, I guess, the opportunity.
Sure. So I think in terms of the opportunity at that time, I remember was it kind of more or less after your Gojek round with Pathao?
This was after our Gojek.
That's right. That's right. So I think what we had seen was that at least the opportunity was there were a few things that were happening. One was thanks to people like Minhaj Bhai and Better Stories, or like Castle Partners, or Startup Dhaka, or even folks like you. There was this culture of entrepreneurship, right? This subculture of entrepreneurship where young people in their 20s felt that it was a legitimate thing they could do, right? For rather than just joining an MNC or something, or maybe even after that, they could aspire to be an entrepreneur.
Yeah.
And I think you guys paved the way in many ways for that, right? And we're always grateful for what you guys have shown. So that was important because you needed a pipeline of entrepreneurs. Right? First and foremost, you needed that culture. People needed to feel like they could become an entrepreneur, so then before you can even think about investing in them, right? So that was one. Second was, I think the government was also doing a lot of great things around, for example, the IDEA project, right? Or the Startup Bangladesh, which was coming up, right? And also their, co-working space. And this was around the time, now obviously Bangladesh High Tech Park Authority is quite active, but they were coming up as well. So there were a lot of things the government was also trying to do to support this ecosystem, right? I think that was also something we saw as a positive. And third was, thanks to success stories back then, it was like you guys, it was like Shapa, it was like Sheba, it was like Jaldal, where there was a lot of international capital that was looking at the market. But their challenge was obviously, and this ties into the opportunity set, their challenge was, once again, similar to Avishkar. They want to make a multi-million-dollar investment, right? They need companies that can absorb that kind of capital and obviously scale accordingly. So, but to get there, you need the companies and the founders, they need that early kind of risk capital when they're still trying to figure out their product, when they're still trying to attack the opportunity, when they're still trying to build their team, etc. In that phase, angel money is important because that's flexible money that's designed for them to kind of get through that hurdle, right? If they can. And so that was the opportunity, whereas, okay, come in the early stages based on the strength of the idea, the strength of the team, the quality of the product, and many other things. And then with the intent that, okay, when some of these companies end up getting to the VC stage, that's when you can potentially realize your exits, and that's when you can potentially, make, multiple fold on your money, right? So that was kind of the opportunity, and once again, because no one else was doing, there were a few people cutting checks, right? But we felt that if we can organize this, and if we can get a lot more people involved, then we can support a lot more companies, right? That was kind of what we were thinking when we launched.
So getting capital organized, deploying it in something that is investable and founders who can actually make things happen, that's obviously the core, part of the job of a venture capitalist, I think. But could you explain to us what does venture capital actually look like from the inside, i.e., where do you guys get the money from, your money from? What do you have someone else providing you the money? And then could you help us understand, us meaning, let's say I'm a second-year college student. What do I have to do for you to think, okay, this is something I would put my money on?
Yeah, sure. So I think when we have that discussion, it's very important to delineate or kind of be clear around what an angel investor does and what they're looking for versus what a VC does and what they're looking for, right? And obviously we're focused very much on angel stage, and hopefully you'll have VCs on in your other podcasts as well. But I could at least talk about from the angel perspective and how that ties in with VC, right? So angel investors, in the context of a market like Bangladesh, they're typically people who have made money somehow, right? So some of them have inherited money. Some of them are part of their own family businesses. Some of them have built their own companies from scratch. Some of them are very senior level executives at corporations where they have disposable income. They have invested in the things that normal Bangladeshis invest in. They've got real estate, they've got FD, fixed deposits, they've got Sanchai Potro, they've got obviously they put their kids through expensive schools and what have you, but now they still have money, right? They still have money, and there's a lot of people like that in Bangladesh, obviously, right? Where I think we're one of the fastest growing countries in the world for millionaires, right? So for them, they're looking to be an angel investor. It's a few things, right? So one is it's a different type of asset class. It's very different from these traditional investments. It can be highly risky, but it can also be very lucrative, right? Because the intent isn't to get 6%, 10% per annum. It's really to get to multiply your money. Right, and obviously the companies that end up winning out, the companies like a Pathao that ends up going to the VC stage, where you can potentially get an exit because the VCs want to buy you out because you're an early stage investor. Now they want to take over the company. Or for example, in the future, this will happen in Bangladesh. When a company goes for an IPO, you could get many times your money, right?
So I'm not looking for, let's say, a 10% or a 12% return. I'm looking for a 10x, 20x, 50x, maybe 100x return.
Those are the ideal. At a minimum, when angel investors, and once again, this is something we recommend to angel investors, is because it's so high risk, you want to build a portfolio, and ideally you want to have 20 to 30 companies. However, whatever your individual ticket size could be into each company, could be 10 lakh, 20 lakhs, etc. the assumption, and there are long-term studies, for example, in markets like the U.S., where that's been done over 40 years. Angel portfolios, I think, return 25% per annum. How does that happen? 50% of the checks, the companies in an angel portfolio don't return any money. They fail. They fail to return money. Whether or not they stay, that's a different story. But they fail to return money. 0x. Around 30% return 1 to 2 times the money. Right. Another 10%, another 20% return 3 to 5 times the money, and then you have the 10% that's really the outliers, right? 5 times or above, right? And those are the ones that you're looking for. Those are the Pathao, those are the ones that become household names. They become, in the US it's like an Uber or have you, but in Bangladesh maybe it's a Pathao or a Shuttle or many others, right? So, but the intent is, across this portfolio, you're still making more money than you could in any other asset class, right?
So you have to make a lot of bets and assume that some of them will not work out, but the ones that do, the winners will pay for all the losers and many more.
Right.
Like
so that's called the power law,
right?
And that is consistent across both angel investing as well as in venture investing, right? So investing in startups, first and foremost, it's the most riskiest thing you could do. You should only invest money that you can afford to lose. So if you have $100 to invest in any kind of thing, maybe 5 to 10% of that should be for startups, right?
That's also the pitch for crypto, I guess.
Right. So, but then the ones that can, they end up returning multiple fold. Why is that? Because these are companies, because of economies of scale, because of network effects, because of many things that technology enables. They could grow very fast. They could capture large markets, and they could become very large companies very fast, right? And therefore, then give you a return. So I think that's the first and foremost thing. But then, as an angel investor, you're expected to do a few things, right? So you're expected to bet on a company when not everything is set. Right. Maybe they might have multiple products that they're trying to figure out which one would actually gain traction in the market. Maybe the revenues aren't as high as you'd like for them to be. Right. Maybe the team is still not set. Maybe there's a key ingredient or person missing in that team or skill set. Your job as an angel investor is to kind of take a bet on what the company could be or what the team could be, and also try to help them. Right. You want to help them by opening doors. You want to help them, particularly if you're a subject matter expert in a particular industry. It ties in with your particular angel investment, trying to support them through coaching and through all those kinds of means, right?
This is the value add, right?
The value add, exactly. So I think that's that's where angel investing is very different from any other type of investment, and I think that's where those who do angel investing really like it. Is I could invest today in Microsoft. But it's not like, and this is like an analogy somebody used. It's not like I could just call up Bill Gates and say, you should do this with your company.
Right.
I can't do that unless I manage tens of billions of dollars. But with an angel investment, if I put in 10, 20 lakhs into an early stage company, the founders are also looking for me, at me for advice, right? And that can be a very, emotionally fulfilling thing, as much as obviously the investment itself. And if you don't want to do that, if you just see angel investing as something where all you're looking for is financial returns, you're probably better off, let's say, investing in a venture fund as a limited partner rather than being an active angel investor, because there's a high likelihood of failure. There's a lot of time you have to put in, but it can ultimately be very fulfilling both emotionally, intellectually, and potentially financially. Now, okay, and then I think you asked the question about angels versus VCs. So angels come in at this early stage, right? But then the VCs start coming at the seed, seed plus stages where now the company is maturing, right? They have found elements of product market fit. They have found a customer base. They have started to build out the team. And now it's about growth, right? And how do you press on that growth? You invest in marketing. You invest in developing channels, right? You invest in obviously growing the team and those kinds of things. So for that, you need lots of capital. And that's where VCs come in. But they also take a portfolio approach to investing, right? They understand that, they also understand that much of the investments they will make will actually fail. It's interesting also, like in the US, the most successful venture funds, those that return 5x their capital back to their investors, and the least successful venture funds, those that return less than 0 or less than 1x, right?
Right.
They have the same proportion of failures within their portfolios. It's just that the most successful venture funds tend to make more money on the ones that do have success. It's really a game led by the outlier companies, and that's what you're looking for. And with regards to venture funds, they're a little bit different because they're even more organized than angels, right? In the sense that they have a very specific thesis. They might say, look, we want to invest in we believe there's a huge opportunity to digitize logistics in emerging markets. So and we want to go after countries like Bangladesh, Nigeria, Brazil, because those are 100 million plus populations, very young populations. So they're going to be open to new types of modalities for logistics, right? Transport. So then they will invest based on that thesis, and they will look for companies accordingly. They themselves have clients. They're called limited partners, and typically these are very ultra high net worth individuals.
Right.
These are pension funds. These are retirement funds who, once again, they're going to be investing in a year tens of billions, if not hundreds of billions of dollars, of which maybe that 3 to 5% is invested in venture capital, because the rest of it is invested into bonds and very safe investments, or relatively safe bonds, stocks, etc. But they're looking for those outliers, right? Outlier in their overall portfolio. They're looking for outlier growth, and that's why they put money into venture funds, and they invest based on the quality of the venture fund manager, the thesis, and etc. Right? But I think that's where venture funds tend to, for example, take a longer time with due diligence, because it has to fit their thesis. It has to fit, go through their investment committee, right? And obviously for them, they're looking to be part of a company, depending on what stage they come in, but they're looking to be part of a company for a long period of time, at least, and ideally all the way up to an IPO or an exit, right? Angels don't necessarily do that. They want to get out ideally whenever, let's say, these companies raise a Series A, Series B to say, look, I've been with the company for 3 to 5 years. Now it's time for me to potentially leave. So those are some elements of difference between angels and VCs.
And as Pathao has grown, and thank you so much for that explanation. As Pathao has grown over the years, the first checks we got were actually angels. And then VCs came in, obviously. And the value that VCs bring and angels bring are very different, right? Angels are much more hands-on. VCs come with a lot of, let's say, a lot more capital to deploy. So as an entrepreneur, I obviously care who I'm taking my money from, but my first concern is, do I get the money at all, right? Am I investable? So what do you think makes an entrepreneur or a company investable at all, and what makes it interesting, I guess, for BAN to even look at it, consider it, and potentially approve it for some investment?
Sure. And I think every angel also has their own kind of sweet spot. Right, when it comes to investing. Now, I think our sweet spot, for example, is we want to come in typically at the pre-seed stage. We want to be maybe the first check into a company after the founders, their own capital, or maybe their friends and family capital, right? Ideally, maybe less than a year to a year plus of operations. So there's some things there that we can measure, but you can't measure everything, right? Et cetera. And maybe they're looking for maybe $150,000, $200,000, right? That's kind of where we'd like to come in. Then why do we come in, or what are we looking for, right? We want to look for companies that can eventually yield an exit for us, for our angels. And when you look at where the market is right now in Bangladesh, of the $800 million worth of capital that's been raised and by startups in Bangladesh, and startups in companies like Bcash in Bangladesh, 97% has come from international sources, right? International VCs. 97%, right?
So how much has been raised by Bangladeshi startups so far?
800 million plus.
800 million.
Yeah, in the last 10 years.
Half of that is what, Bcash?
Pretty much.
Half of that is Bcash. I guess ShopUp is
another third of that, or
another third of that. I guess Pathao is some percentage of that. The rest are there any other big investments?
Well, then you've got Pathao.
You've
got Shuttle, right? You've got companies like Maya, right? You've got also companies like Truck Bay, Loop, others, right? So, but obviously, it's once again power law,
right?
It's those two companies, Bcash and ShopUp, that have raised the most amount of funding, right? And then it kind of goes through
a long tail.
It's very interesting. It's very interesting how it tracks, right? That dynamic. But having said that, so what your most likely chance of getting an exit as an angel investor coming in at the early stages is a company potentially raises money from international VCs and giving an exit to you when they raise later rounds, right? Series A, Series Bs, etc. And Series Cs, right? I think in the context of ShopUp. So if that's the case, then you want to look for companies that are potentially fundable down the line.
Right.
And you need to see certain elements of that evidence, right? Or certain elements of that even at the angel stage.
Yeah.
The first and foremost thing is you want to look for companies that are going after a very large market. right? They can't be going after niche markets,
Okay.
right? What that means is, for example, that this is a problem. However way they define the problem, it's probably something faced by millions of Bangladeshis rather than say a few 100,000 or tens of thousands of people, right? Because the intent is, imagine what you can do if you capture 1% of that market share, right? How large of a business can it be, and can this become, let's say, 100 million a year run rate company? I like the element of, for example, Loop or Truck because when you take a look at the logistics market in Bangladesh, it's worth tens of billions of dollars already, and it's only going to grow because the economy is growing, right? And so it's and the share of logistics is only going to grow as the economy grows. So imagine if a Loop or a Truck like Bay, and I'm sure this is where their angels were thinking when they invested back a few years ago, is imagine if this company could capture even 1% of that. That could become $100 million a year, $200 million a year company, right? So I think the market matters a lot. It's got to be large, and there, I think also you got to look for white spaces where there aren't a lot of organized incumbents. What I mean by that is, for example, I think ShopUp is a good example, right? When they kind of pivoted from supporting Facebook sellers, because once again, they're investors. VCs were pushing back against saying, is the market large enough? Are there enough Facebook sellers in Bangladesh to build a big company? Then they pivoted towards these mom and pop shops. There weren't really any kind of organized competition when that was trying to, for example, deliver inventory to these mom and pop shops, provide finance, provide logistics, kind of all in one package, right? It was kind of a white space, if that made sense, right? So you look for, or even once again in the example of like a Truck like Bay or a Loop, their competition isn't really each other. It's really the truck broker that sits in a dingy room with the cell phone in hand, that's trying to get a quote, that's constantly on his phone trying to get a quote, right? From both the person who wants to use the trucks and the truck owner or truck driver, right? That's your competition. They're analog, they're informal, and they're not necessarily they're not using technology to be efficient, right? And what you're trying to do is you're trying to organize these massive markets by way of technology, right? And so there's got to be that angle, where you have to be able to communicate that. I think that's first and foremost the main thing, right? So that's one. The second then is, you look for, then what is your solution, right? It's very hard to get funded just based on an idea, right? But if you have, I still remember, sitting down with like the founders of Loop, whenever they had their first, whenever they were still kind of in the market for angel investing, and they showed me this, great platform where I could go in, I could actually see myself going in and using it, right? And in order to find like a truck vendor, for example, like I think you have to, like, in the absence of, obviously a lot of things about you matters. Your profile matters. What have you done before matters. Your education, your skill sets, those things do matter. But ultimately, your execution matters. And in the early stages, in the absence of being able to show traction around the whole business, at least showing a great product, I think goes a long way, right? You could say.
So it's big market, then it's a product?
Yes. Got it. And even then, you look for products where, could this be 5 to 10 times better than the alternative? So I always use this example in sessions with entrepreneurs, is actually Pathao. Because as a single guy living back when Pathao started getting popular, I used to wake up every morning in Bosundhara. I would have an office in Pantaboth. What I would do is I would get up, I would get out of my house, I would get on a rickshaw, and I would have to go to one end of Bosundhara to another. And I would stop every single CNG that was waiting. And I would just negotiate with them. Will you go to Pantaboth? Will you go to Pantaboth? And then I would say meter, but nobody wants to go on the meter, right? And nobody wants to go to Pantaboth in the morning from Bosundhara. So then, somebody will say 500 taka, somebody will say 400 taka, and I would eventually try to negotiate with and find somebody who said 250. So at least 3 to 4 CNGs later. So that's 30 minutes of my time. And 30 taka of my time. Just to get on a CNG. I'd get on that CNG, I'd be stuck in traffic for anywhere between an hour to 90 minutes to get to Pantaboth, and have the privilege of paying 250, 280 taka to go. And then I would repeat that process every evening to get back home. I would get to Bosundhara Center, the mall. I would go
Bosundhara City, right?
Bosundhara City. I would go up and down the rows of CNGs, try to find somebody who would go to Bosundhara. Once again, negotiate. Once again, get on. When Pathao came in, I just literally get on this app. I would, I would designate my location, and I could find somebody within 3 minutes. So already,
and he would come to you.
Exactly. So 30 minutes. Rickshaw to CNG. That's now cut in 3 minutes. And then instead of, I think back then, maybe prices are different now, but at least back then it was like extra bish, extra dosh, right? Whereas 250, so already half cheaper. 50% cheaper, or
Right.
2x cheaper, right? Depending on how you look at it. And
Yeah.
then so not only am I saving time,
Yeah.
I'm saving money,
Yeah.
right? Time is also money.
Yeah.
So clearly there's an improvement. And there's a reason why I migrated to Pathao. And I remember for the first 2 years that I used Pathao, I stopped using CNGs.
Yeah.
Like I could literally count one time, like even in the last few years, like between Uber, Moto, and Pathao, like how many times I've used the CNG. And I'm guessing I'm not the only person. Like I'm sure there's a lot of people or stories like that. So there's a clear improvement. It's not just 10% better.
Yeah.
It's not 20%, because human behavior is such that people don't want to change behavior unless there's a very compelling reason to change behavior, right? You keep wanting to do whatever you're used to because you're afraid of what's going to happen if you were to shift to something else, right? A new way of doing things. And once again, it's also about building habits. So in order to do that, in order to entice people, you just have to be a lot better, not just somewhat better.
I think someone made this law kind of. It's a social science kind of thing, which is you have to be 4x better than the current status quo.
Yeah.
So whatever the status quo is, you have to get 4x better in order to get your product to be sticky.
Yeah.
I think Pathao's current CEO Fahim kind of explained to this in a very nice way on a presentation that, hey, before Pathao, your fares would be much higher, your time would be much, you'd take a lot longer to get somewhere, and the experience overall wasn't as good, right? Someone comes to you versus you going out and haggling.
Yeah.
Many years later, somehow Bengalis, we found a way to haggle again, but what have you, and there's probably a reason or a lack of product, being good enough for you that people have even gone out back to haggle in the first place. But something to think about. But this 4x rule, are there any other companies in Bangladesh where you think, okay, this company is actually 4x better than whatever the status quo was?
Yeah. I think you look at the examples like, and obviously there's a bit of a debate in the community around, is Bcash a startup? In many ways, it is. It was a startup entrepreneur, right? Like, and who started it, but obviously they
What is a startup? What is actually a startup?
It's a good question. I think to me, it's a company that seeks to solve a very large problem in a technology-enabled way that seeks to then dominate that market, right? And how you get your money, that's a different element to me than necessarily and there's different ways. But I think going back to the example of Bcash, they obviously benefited from corporate patronage or corporate support from BRAC and BRAC Bank and those and obviously the Gates Foundation, right? But like what I had heard with the example of Bcash, and I'm not as much of a user of Bcash personally, because I use, I'm part of, I guess, the 1% of the people that use cards, right? But most people don't. Most people use Bcash.
Yeah.
But what I understood that was a big problem is internal remittance, right? Where somebody would earn, for example, like a day laborer, wage earner in Dhaka, he or she would have family members back in, and outside of Dhaka, and how to give the money, right? And it was the Hundi system.
You've seen the presentation that Kamal Bhai shows at every single speech or talking event, right?
No.
It's actually this fish entrepreneur or business person who bought fish and now needs to send money, and there's some sort of he's selling the fish, but he needs to get money remotely and stuff like that. So he primarily, I'm sorry for interrupting you, but he primarily talks about these two things. That, I am earning money in Dhaka city and I need to send it to my Gramganj, and I am, let's say, a businessman who's selling on one part of the country and receiving payments on the other. These are two things that I have to solve for. And with regard to Bcash startup, I've heard this so many times. Every single time it's my same question, that does the corporate ownership structure, or should it even matter? Right? If you're solving problems, well, the only argument that is fair that I've heard is, hey, they weren't necessarily tech based. It's initially it was just a USSD or something like that interface, right? It wasn't an app or anything of that sort. To which my counterpoint has always been
technology enabled.
Exactly. That my counterpoint. If you started with a mobile app back when they started, no one would use it. No one would use it. So, sorry for interrupting.
No, of course. And one could make the argument that it was because of the backing of BRAC and BRAC Bank that they succeeded, right? And one, in terms of accessing users, because BRAC knew how to get to, that bottom of the pyramid population, and second, obviously, they need the backing of like the particularly in dealing with regulatory issues, right? Having that backing of a major financial institution, I'm sure helped quite a bit, right?
So just to make sure people understand what we're talking about, bKash is owned, I think, 51%.
Yeah.
So there's a shares issue versus control issue.
Yeah.
bKash is 51% controlled by Bragg Bank.
Yes.
I think that's a better way to phrase it.
That's
and
right.
49% by themselves and other investors.
Right.
And this allows them, as you said, some legitimacy in the eyes of the consumer, perhaps.
Sure.
That, hey, a bank is involved, and a reputable bank.
Sure. Absolutely.
Cool. Yeah.
Whereas, let's say if, and I know there's some regulatory issues there, but let's say if GP had built a version of bKash, then that's not really a startup. It's a corporate product, right? Or it's a corporate entity or a corporate subsidiary. So and what I understand with bKash was it started first as a startup, and then they got these partners on board and things like that. But, and I'm sure, you'll have Kamal Bhai at some point, and he can shed more light on that. That's another example, right? Like your 4 to 5x rule.
Yeah.
I think another kind of technology product that's had a lot of sticking power is obviously food delivery, right? Whether it's Pathao or Food Panda, right? Or Chaldal, yeah, exactly. And particularly because, once again, being a single guy, I remember like in 2014 when I first came back, like before these food delivery apps became very popular and I was aware of them, is that I would just have to get out of my house and I just like get on a rickshaw, like once again rickshaw, I just get on,
go
like
to Bosundhara Gate,
exactly, go to Apollo Gate, and then there are these food stalls, and I would just go in and I would just eat there, right? And then that's like an hour of my day. Versus, go on the app or go on the web app, order, it comes to you. It wasn't really that much more of a surcharge anyways. And I think in the early days, in order to make the product sticky, they were providing it for free. So huge improvement, right? Like huge improvement in the. So I think that's the key thing, though. Like I think you have to have a reason. I think both when talking to investors and obviously to your consumers, is you have to have a reason why somebody should switch. Right, and I think that's very important to kind of lay out that customer journey and being able to show exactly where you're making improvements, right? In that kind of process.
Right. So it's big market, good product, and 4x improvement ideally with the product experience. Yeah. What else, Pam?
What else? I think the founders are a big part of this too. Right. I think when you sit down from someone, I think you sit down with the founding team. I think a few things. One, you want to be able to ask that question, like, are these people part of the 1% of people in the country capable of solving that problem? It's not about being part of the 1% of the country, period.
Right.
But 1% of the country that's capable of solving this problem from different reasons, right? So maybe they've had some of the things I like to ask is, what have you done before, and what have been your major accomplishments till date, right? Have you built, have you managed large projects? Have you managed successful teams? Right. Have you, if you're, let's say, if you're like your CTO, what was the big, what was some of their best kind of, let's say, if they have done software delivery before, what's been a software that they like to talk about that's been used by many people, right? Like, I just want to see examples of that. Do you have that, track record of execution? I think that's key, right? You also want to see a certain level of subject matter expertise, right? Within the team, or at least the willingness to acquire it. Right. Well, I mean, one thing, even just getting nitty gritty, like one thing when we did our session way back during the pandemic, I love the fact that you guys would go to these college, gates, and you would just talk to customers and you would get them on, and I really respect that, right?
Our subject matter expertise was hustle.
Yeah, exactly. No, but you were willing to get nitty gritty, right? You were willing to go and talk to you want to see elements of that, right? Because I think that's the only way to figure out a solution, right? I remember when I was doing the sanitation thing, I would go to, slums. I would, I would go, work with sweepers. Like I would kind of see how they would do their thing. And then, we based a lot of those pain points or our service based on the pain points we saw in that kind of process of working with sweepers, right? So I think you have to get down, on the ground, right? I think you want to see a balanced team, somebody who knows business, somebody who knows management, somebody who knows technology, right? Somebody who knows the subject, and it could obviously kind of be distributed across a few people or multiple people, right? But you definitely want to see that. You definitely want to see, I think, people who are, or at least within founding teams, like, there's an element of coachability. They're willing to work with you. They're willing to at least take your ideas, even if they reject them. They're willing to tell you why, right? I think rather than saying that this is what I believe, because I think the main in addition to hustle, I think flexibility is quite key. I think it's those two things. Being able to turn on a dime based on what you're seeing from the market, but then being able to do that because you're moving fast, right?
Yeah.
I think those are two key elements of an early stage entrepreneur, right? And because at the end of the day, like you're going. I mean, ultimately, the success of the company. Your product can change, your strategy can change. Sometimes even your market may change based on pivoting and things like that, right? But it's really the founding team that will drive all that, right? So I think that's a big part of that too.
Okay, so big market, good product, great founders, ideally people who have built something before, ideally a balanced team where you have a business guy, a tech guy, and whatever subject matter, domain expertise, whatever you need. Outside of these three things, are there any other things that you put a lot of weight on or look at?
One element, so once again, going back to the point that international VCs, you want these companies to get to that level, right? I think a key element there in terms of the signal is you want to look for similar business models in other markets that have scaled, right? And you also want to know if the founders are looking into that,
right?
Because when VCs invest, with the exception of those who are based locally, or even in the case of Anchorless, which is like New York fund, but they're focused on Bangladesh.
Right.
There's not many like that.
Right.
There's not many VCs that are focused on Bangladesh. So when they invest in Bangladesh, it's probably because they either have a regional thesis that say, okay, we're looking at Southeast Asia or South Asia, maybe ex-India,
right.
or more likely, they have a particular thematic thesis. In the case of, for example, exactly. For Omidyar and ShopUp, it was financial inclusion, right, for the bottom of the pyramid, right? So if that's the case, what they love is when they see because they already think Bangladesh is very risky,
right?
For many different reasons. That's a whole different conversation about why Bangladesh is perceived to be such a risky place to invest.
While we're on the topic, just high level, what are those?
Well, I think one. There's a few things, right? So one is politics, right? It's I don't think we have the most stable politics. Right. A second is if you look at the certain kind of makeup of the economy. For example, we don't have a very large capital markets.
Right.
We don't have a very liquid kind of our banking system is not in the best shape, etc. Right. And also, but a lot of that is actually perception in the media, right? When people read on The Economist and they see that there's been a big, fire,
flood or
right?
Fire,
yeah, exactly. They think that this is, for example, like I think a lot of embassies still, look at Bangladesh as a hardship post, right? That you get paid extra to come to Bangladesh and work there, right? Particularly because we had this one terrorist incident that happened 6 years ago, right? But it's still seen as a high-risk country for potential terrorism and things like that. There's a lot of perception versus what's reality, right? Even I think certain garment companies, right? Certain major fashion brands, I think they will have certain precautions, to their employees if they come to Bangladesh, right? When it comes to safety protocols and things. I think less and less so, right? But I mean, all those things I think are a challenge in kind of selling Bangladesh to the world. But having said that, so going back to those VCs, for them, okay, they see a Bangladesh. What is the risk for them in Bangladesh? Can this company get an exit? Right, because you don't have a large enough local capital markets yet, where companies can get, and nor a history of companies from idea to IPO, right. So that's one. Second, would local conglomerates and large companies buy out these startups? We haven't seen that yet either.
Right.
Could a regional equivalent come in and buy such a company? Maybe, maybe, but then we don't have a good track record of FDI in the country either, right? Like even some of the largest telcos, for example, have struggled to get some of their money out, right? Repatriate their profits and things like that, or they're having issues with the government, right? So that's a big, for them, VCs are about exits, right? Can they get an exit using this model? Okay, then, I mean, that's one element. I'm sure there's others as well. But then, so for them to come into the market to de-risk, one of the things they want to do to de-risk the investment, because they don't want to see the investment fail, is has this model worked elsewhere, and have we invested in a company like that before?
Has this model, okay, so the startup that we're considering, has this model worked somewhere else in a different part of the world?
And have we invested in such a company?
Got it.
Right, that's probably the best way for them to kind of say, okay, well, we've invested in this kind of company before, but it was in Latin America or it was in Africa. okay, then therefore it might work in
Pattern
Bangladesh.
matching.
Right, exactly. So that's probably I think that's probably the biggest question. And that's also an advice to founders when they're looking to reach out to VCs is you should take a look at their portfolio.
Yeah.
Does the theme match and does the portfolio match? And you could say, well, we're, that company you invest in, we're the same one, but for Bangladesh, right? And here's the and not only that, but here's the traction we have, and we might even be a better company than that company, right? I mean, those are discussions you can have, but that's a key thing is I think looking for signals where are there startups in other markets with very similar profiles and similar business models, similar products that have reached a certain level of scale, and you can just say, look, we're trying to achieve something similar for Bangladesh.
Got it. Shifting gears a bit, coming back to BAN itself.
Yeah.
So how many deals have you guys done so far? How many angels are in the network per se? How much money have you deployed? What are some of the early results? I know it's been like 3-4 years, maybe at max.
Yeah.
But how are things going?
Yeah. So we've done 41 investments.
41.
The first one is in July 2019.
Okay.
And the latest was obviously this month.
Right.
So what is that? 3.5 years?
3.5 years.
Yeah.
Wow.
3.5 years. And we've been very busy the last 12 months. I think, especially in Q1, we've invested in 20 new companies, right? So
in the last
Q1 to Q2 of this year.
Q1 to Q2 of this year?
Yeah, I think we invested in 20 plus companies.
20 plus.
Yeah,
okay.
so that's like, pretty much like what? That's 24. Yeah, that's like one a week.
Right.
So we've been very, we've got.
Oh, wow.
We've got, of the
is that common?
Yeah.
Like, is this common?
We've just been very active. I think we've just found really interesting deals. And second, we've grown as a network, right? So we now have investors in 5 different continents. 98% of them are Bangladeshi.
How many investors?
We've got, the people who've invested in companies is around 130.
130 active users, i.e. people who have
activated. Yeah, that's right. That's right. In that funnel. In that funnel. Yeah, exactly.
And are you guys investing purely in Bangladesh, or because you're a network of international investors?
Yeah.
Could you do regional deals?
We could, but I think our strength is in Bangladesh because we're here, right? We have the ability to assess businesses. We can talk to founders face to face over coffee and things like that, right? We are also, being the only kind of formal angel network in the country. Naturally, people refer companies to us, right? VCs might tell us like, hey, take a look at this company. They might be a little bit premature for us. Take a look, or obviously we work with all the incubators and accelerators, and that's a big part of it too. So I think that's our unfair advantage, right? So another element then with startups is you look for unfair advantages, right? Whether it's the founder quality, the product advantage, potential economies of scale, network effects. Those are all unfair. What is your unfair advantage? For us, it's focusing on Bangladesh. That's our unfair advantage. Having said that, though, for example, I think at least half, if not a majority of the portfolio, for example, have their holding company in US or Singapore. Right. So that, so we have the ability to invest in such companies now because, more than half the network is now NRBs, right? And
but also the other half who don't have their holdcos outside. Are they just too early, or have they intentionally chosen not to do that? So
I think, one thing we see a lot, for example, is they will come in the early stages, but then when the company flips, right, over to Singapore or elsewhere, then they will also take their shares, right? I think that's probably the best way to do it. Obviously, there's also more informal ways where, for example, they might have a family member abroad. That's very common, right? So maybe the family member invests on their behalf. That also happens as well, right? So yeah, for sure. But yeah, 41 companies, 130 plus kind of active investors, so to speak. I think of which maybe 20% have done at least 2 to 3 investments through that.
So are there any portfolio companies that listeners might know, or that have so far shown early signs of progress? Or
so the first one we ever did was Zantrik,
right?
And they've had a lot of staying power in that market, right? They're trying to automate and introduce digitization to a multi-billion-dollar industry, which is the market for car repair services.
There is $1 million, I think, the seed round.
Yeah, we were part of that. So I mean, they raised that over multiple rounds, but we have been part of their rounds, since the beginning. So BD Venture came in first, and then we came in after, back in 2019. So that's one. I think you might have heard of Swap. Yeah, I think you had Parvez Bhai there. So we were part of their round in 2021, I think, and then obviously they raised recently from Startup Bangladesh and elsewhere. So that's been and we're very, and I think both of those, right? Like Parvez Bhai, Shubha Bhai from Zantrik, like you meet with them, you talk to them. Like even in the case of Parvez Bhai, he really is part of the 1% of the people in Bangladesh capable of solving that problem, because he's been doing electronics trading, retailing for 10 plus years.
Right.
But he really knows the market.
Okay, this is a good example. So when you first spoke to Parvez Bhai, what was or how did it happen?
Yeah.
So you, from the moment that you were aware of swap's existence to the moment you signed the check, like how did that happen?
Yeah. So we got introduced digitally during the pandemic. We got introduced through, I think you should have him on at some point, Nazim Farhan Chaudhary Bhai of AdCom fame. He's been an angel investor. He's been with us since the very beginning. He's been a very active angel, both through Bana on his own, and he knows the media space very well. And you know, through that, he has some digital businesses as well, right?
Yeah.
So I think Parvez Bhai reached out to him. Farhan Bhai then introduced him to me, and then we kind of kept in touch over the kind of early phases, and then we initially had some interest in early 2021 when Parvez Bhai initially presented to BAN. Like, you know, we do these kind of closed door pitch sessions between companies and our investors, sometimes physically, but we found that it's faster to just do it online. Especially for those who are not in Bangladesh.
Right.
But I think the momentum really kind of, you know, got going when he was able to get into Accelerating Asia. Right. Because, you know, that's an international investor. They've been very active in the market. And then they put in, you know, a certain amount of capital.
Right.
And then from there, like, I think he was able to get a few investors of his own.
Right.
We brought in our own group as well. So I think that really helped put together this, you know, I think the round ended up being more than $1 million plus, right? But we were part of that. Like, we were maybe 30% of that. But I think that helped. Like, so that's another kind of element, you know, and so those nuances of when you invest is who's in there with you, who's in the cap table or who's coming into the cap table, right? Angels just like, and I think VCs in particular think like this, is who else is coming in on this round. But I think that also is true for angel investors as well.
So when you're investing in a deal like this, there are many stages to getting a deal done, but due diligence is one of the, you know, more important ones. Who does the due diligence? Is it you guys? Is it whoever is leading the round? Or how does that usually happen?
It's a combination. I think when we are more than, let's say, if we are the primary. Right. Let's say our angels.
And primary means you are investing the most money.
Right. Exactly. Then what we would do is we would look to write our own kind of investment memo, right, on the company. And so my team and I will typically, and this is probably the most laborious and hardest part of the job, is, you know, we'll go through your data room kind of line by line, right? We'll look at your financial model.
And what's a data room?
Yeah. So it's typically a Google Drive, or sometimes I think there's, you know, platforms like Carta that does this, or, you know, DocSend, where, you know, you have your legal documents, you have your financial documents, and, you know, it allows investors to kind of see and match whatever they're seeing with what's on your pitch deck, right?
So what you're saying and what is actually there, you kind of match whether everything you're saying is lining up and whether it's true.
And things we want to see is, like, for example, invoices, right? We want to see agreements, right? We want to see your profit and loss statement, your audit statement, your bank accounts.
So you can't just tell a wild fairy tale and you can't just let that be.
Ideally.
You have to have it, the receipts. You have to bring receipts to back it up.
Right. And having that organized is very important, right? Because let's say you meet with an investor. If they say, "Oh, we're interested," typically they're gonna say, "Can I see your data room?"
Right.
So you have to be able to get that out as soon as, right? So you got to have that ready. If you decide you're gonna fundraise, obviously you need a pitch deck. That's the very first thing, but you also need a data room, like, to back that up, right? So, but yeah, and continually update that, right?
Right.
But yeah, we'll take a look at the data room. We'll summarize it by way of an investment memo. We'll circulate that, right? And we'll also share that with other investors as well. And then another element is what we typically would like to do, and sometimes, you know, that can also hold up the process, and we're trying to be faster on it, is we might appoint, for example, like a lawyer or a financial firm to kind of go through a checklist, right? Like a quick checklist to say, okay, are the legal documents in line? Is there any clauses in certain agreements that we should be worried about, or that's material risk to the company, or are there documents that they're missing that they should have, right? Just at least to call it out. It's not a deal breaker, but at least to be aware of things so they can be fixed, or they can be part of the investment agreement, right? That we could say we'll fix it. Another is the financial due diligence in terms of, okay, you know, take a look at these documents, invoices, accounts, etc. Does it make sense? You know, are there anything we should be aware of in terms of red flags, right? So those are elements where, but of course, if we're not the lead, then we will look for whoever is the lead to kind of share that information with us.
Got it.
Right, and I think we'll make that judgment call based on the quality of their own due diligence. Yeah.
Couple more questions. So, okay, fine. You guys have invested so many deals, are there any themes or any, let's say, opportunities that you are viewing? Okay, these are specific opportunities that people would do good to, tackle.
Yeah.
Or another way of asking that elaborate question is, what's hot right now? Like, what sectors are hot right now?
Yeah. Well, I think, you and I were talking about, I think there's so much to be done in the fintech space. And I think there's so many things to be done around both, for example, I know you're working with Pathao on the BNPL product.
Yeah.
I think that's really exciting because it's another way to kind of provide liquidity to the masses, right? For them to then purchase things that they need or they aspire to, etc.
Yeah.
But I think there's so many things, there's so many things to do around that, right? There's so many things that the aspiring middle class wants to purchase, wants to avail, but maybe that's kind of out of their reach right now unless they were to look for informal sources. I think there's a lot to be done around, for example, like we've looked at a couple companies that are trying to be like, like the Robin Hood of Bangladesh obviously there's a lot of nuances to that, but the idea that you make it easier for people to open BO accounts, to trade, to track different types of portfolio, to build their own portfolio and to track it, right? But rather than having to call up your broker, can you do that on your phone? I think that's going to be important.
Right.
Once again, when it comes to wealth creation for the middle class and beyond, right? We're looking at companies that are also looking to kind of create that digital layer between the banking sector and startups, right? And being able to create new types of financial products, right? Those have been funded in other markets, like in Pakistan or in Africa, for example.
Right.
We should probably have that. So I think there's a lot to be done just generally in fintech, right?
Yeah.
I think Bcash has really paved the way, and I think there's opportunities for beyond that. I'm also excited about agri-tech.
Yeah.
I think agri-tech is an opportunity. Recently, we were not part of that round, but recently AgroShift obviously raised a pretty significant round. Obviously, like iFarmer is there. There's a few other companies that are coming up in that space where there's just so many inefficiencies between the farmer, who's the beginning of the chain, and the end consumer.
Right.
And using digital means to kind of organize that. Once again, organize informal markets. Right.
So let me read what I think is a quote, but I want to read a quote, or I think it's a quote. Tell me what
Sure.
if it's correct or not. Feel free to correct me. If you just kind of look at the Bangladesh economy, you look at certain large sectors, for example, logistics or healthcare or many other places, right? There are a lot of opportunities of different segments. You provide different types of services, digitally enable services, and hopefully you gain customers and add value to them. So this is part of a larger transcript where you're kind of laying out what the big opportunities are. So could you kind of help us understand how do you size these opportunities? So for example, as an investor, when you say, okay, X is a big sector or Y is a big sector, how do you kind of size these opportunities? I.e., what is one sector $1 billion or $2 billion? How do you kind of come up with those estimates?
Yeah, it's a good question. And I think, that sort of market sizing is kind of, it's both top down and bottom up, right?
Okay.
So I think the top down element is there's already probably a lot of studies done on, things like, healthcare spend as a percentage of GDP or things like that.
Right.
Or, obviously, the BGMEA talks a lot about how big the garment sector is, right, or et cetera. So I think that's kind of one element, right, is just kind of, take the top-down kind of analysis from ideally reputable sources and using that as a means. But I think then you should also think about kind of the bottom-up, right, of market sizing, where you might say, well, within your own user base, right, if you were to talk to 100 target users and if you were to kind of quantify, okay, well, how much do you spend on X, right? On a month, I think the one we were doing recently was around a company that's in the primary education space, right? And we were trying to make a point that why is this a startup opportunity versus just a business opportunity? Right. Then obviously you have to be a multi-billion-dollar market, right? And I think she was trying to make the point that, at least based on the thousands of households that we've talked to, they spend a X percentage of their income, on their primary school students, whether it's tuition, whether it's extra, tutoring or or let's say books and educational materials,
so
etc.
large portion of
Right.
just goes to education.
Right, exactly. So then if you were to take, the middle and affluent income population of Bangladesh, and however many households there is, if you were to take what is their average income, and if you were then to extrapolate that and say, well, this is their potential spend on education, how large could that market be, right? But I think being able to, you want to be grounded on numbers that you can defend, whether it's from a good source or whether it's from your own, and ideally your own experience, right? But I mean, I think every company has their own way of trying to figure out how large their potential market is.
Got it. Okay, so just the later part of this quote is, again, correct me if I'm wrong, so a similar question you got asked at this other source or at the other interview. What do you think what's hot right now? One you said is, okay, service exports in relation to our competitors. The question was, what do you think some of the challenges are for Bangladeshi companies who are currently serving overseas clients, right?
Yeah.
And you said one challenge is of the growing market share is in relation to our competitors, we don't have a lot of presence on the front end.
Yeah.
So where there are large customers, whether it's in the US or Canada, to a large extent, we don't have the sales offices or sales representatives. The second challenge is we have a lot of freelancers on the supply side. However, you would like to see a lot of them rolled up and ideally, serving as a more organization, a more organized organization, if you will. So could you kind of do a better job than me of explaining what the question was and what you see as some of the challenges were?
So I think then the question is, for example, can SaaS out of Bangladesh be competitive, right?
So SaaS is software as a service, and it's basically that you build in Bangladesh, but serve to users who have higher purchasing power around the world.
Yes, because I think the challenge is, I think we don't have a culture in Bangladesh of, let's say, paying subscription fees unless it's Netflix or entertainment, right? We don't have a lot of culture within at least consumers, maybe even within SMBs about kind of paying recurring fees to access software. Right, and so then the local market is still quite nascent.
Right,
it doesn't mean it'll be the case maybe 10 years from now or even 5 years from now, but I think it's still quite nascent. So then, if you are trying to be a SaaS company out of Bangladesh, then obviously the natural, then you look for overseas markets, right?
Right,
and particularly in markets like U.S., which is by far the biggest SaaS market anywhere in the world, or North America if you lump up Canada alongside, or maybe even Europe and other things, right? I think there's a few challenges there. One is the people who are who might have the skill sets to go after such opportunities. They're probably going to come. Many of them will come from the BPO sector here, right? Because they're already servicing clients overseas, and they have certain expertise. And we have quite a few companies that are at like the few hundred people scale, right, within Bangladesh. The problem then is to kind of switch from providing services to actually productizing what you're doing, right?
And why is that important, Pat? Like, why can't I just be a service?
Well, because then it won't scale after a while, right? You'd have to kind of continually throw more bodies into get more software engineers, get more clients. One contract ends, and then you're going after the other. Whereas with a product, you build a product, and hopefully people will take that up. They'll refer their friends, or you can get more customers.
You make sales while you sleep.
Exactly. Right. Whereas with services, you're trading your software engineers' hours for dollars, right? Or their hours for dollars who will turn into takas, right? So I think that's one challenge. The second is, it's highly hyper competitive, right? India has a lot of companies. For example, Freshworks was the most recent, I think, that started in India, but with the intent to always go to the U.S. and to play this kind of arbitrage opportunity where you have very talented and relatively cheap software engineers in India, but they're developing for the U.S. or these more mature markets where they, clients are willing to pay much higher than they would, let's say, in India, right?
And so, I guess they also develop that access to clients, right?
Yeah, exactly.
So it's not just mid-tier clients, but actually they have sophisticated sales channels.
Exactly. But I think Indians have a specific advantage here because there's a lot of Indian engineers, executives who are now in decision-making powers, right, in markets like the US in the technology sector.
Yeah.
And there's just a lot more of them compared to Bangladeshis, right? We're a much younger diaspora. We don't have a lot of people in positions of authority, CIOs, right? Heads of, VPs, right? Those are the people who sign off on contracts, sign off on, vendors and things like that, right? We don't have a lot of people who can then vouch for, let's say, Bangladesh, right? In that regard. And I think India itself, it's a very well-known kind of source for very quality software, right?
Right. So it's a branding issue as well.
Yeah, absolutely. So I think that's a challenge as well, like competing against, it's not just India. Look at Ukraine.
Yeah.
Ukraine's a much smaller country, but they tend to produce very quality software. They have a very good reputation, especially in Europe, and they have the advantage of time zones, right? They're in the same time zone, right? So they could provide kind of round-the-clock customer service that it's a little bit harder in the context of Bangladesh,
so many little things that I guess is missed. So many nuances, like who's the decision maker, what time zone are you operating in, do you have the right branding? I
even had one company, it's not a SaaS, they're trying to build a SaaS layer in the textile space.
Yeah.
But their challenge was they just couldn't get visas to go see their customers, right? Their customers had to come to them, right, in Bangladesh. And some of them will come because obviously Bangladesh is a textiles destination.
Yeah.
A lot of them will want to see you, right? I mean, that's just the inability to get on a flight whenever you want as a Bangladeshi with a Bangladeshi passport, to go out and talk to your clients overseas. That itself is a challenge when it comes to SaaS, right?
100%.
So there's a lot of these different nuances. I think that still makes it difficult as a Bangladeshi company.
Got it. And with regard to building in Bangladesh and selling to the world, who are some companies you see who have done it really well? And that's the question.
I mean, a few of them I've seen, for example, Nitex is part of our portfolio. But once again, it's a combination of both SaaS and service, right? Because what they're doing is they're on one hand, they're providing a platform by which overseas buyers can source from garment factories in Bangladesh and to kind of monitor that workflow through their kind of digital solution. But on the back end, they're also doing a lot of work on the ground to manage these suppliers and things like that, right? So it's a combination. It's not just pure SaaS.
If I understand correctly, Nitex basically connects foreign buyers to local suppliers?
Yes, that's right.
There's, of course, a lot of more.
And there's other companies coming up like Merchant Bay that's also trying to do something similar, right? So I think Nitex has done a very good job of kind of reaching out to these overseas, buyers, particularly those smaller brands that might not have, or have had trouble in the past sourcing from Bangladesh because they don't have people on the ground, and providing that kind of infrastructure for them, right, in a cheap way or a cost-effective way, right? So I think Nitex has done quite well. They've even raised venture capital from the US, for example. So I think we're very proud of what they've been able to do. I think MyAlice is quite interesting. We're small investors in MyAlice, obviously not as big as Anchorless and others, but we've been able to see that they've got a client base that kind of spans the world. They've even got presence in places like Pakistan because they've got partners on the ground that are selling their kind of solution to clients in those markets, right? And obviously they're trying to build themselves off of platforms like Shopify and others where you do have kind of merchants around the world who use that, right? And so Alice is really building on top of that, right? So I think that's exciting as well. So I mean, there's a few elements like that, but it's definitely challenging for sure. Like you'll never, like even recently, Marco Polo, which is in the space of kind of allowing SMBs to kind of automate their content marketing, and obviously try to figure out the ROI from that. So they've got clients all over the world. They're based in Singapore, but obviously they're they start in Bangladesh, right? So I think they've done well. They've even gotten a lot of traction through platforms like AppSumo, right, where they got a lot of users. But it's still, I think the narrative, whether it's MyAlice or Marco Polo, is that particularly when you're trying to pitch yourself to VCs, is that there's similar companies like this already. Whether from India or elsewhere, like what makes you different? Because you're trying to go after the same target market, right? So I think that's the question you got to answer.
Got it.
Yeah,
understood. I know we're coming up on I think 1 hour and 10 minute mark. We've been at it for a long time.
No worries.
I just want to ask a couple of more questions and then we can wrap up. So, what's the average? So if I'm an investor, right? So let's say I'm an NRB, I'm sitting outside of Bangladesh, I've done relatively well in my career, and I have that disposable income that even after allocating to every single asset class, I now have to allocate to risky startups, right?
Sure.
How do I go about doing that with BAN?
Yeah, I think the easiest thing to do, one, to be part of the network. I think, there's a lot of people like that, to be honest. I think, in fact, we're notorious on LinkedIn, my team and I, for
I've
just
heard.
for just hitting up anybody who remotely has a Bangladeshi name,
Yeah.
is based overseas, and has some kind of like, maybe they're working in tech or finance,
Yeah.
etc. So, we're probably reaching out to you anyways, right? And you probably have talked to us anyways. But yeah, I think easy enough to just join the network, be a part of our email list, and see
Yeah.
what's coming through, right?
Got
That's
it.
the least you can do, is just see what's out there.
Got it.
And wherever you see a company that you're genuinely interested in, or you want to support the entrepreneur, we're always open to making those introductions, right? In fact, we like being in those calls as well. We learn a lot through
Right.
those interactions, right? I think the second part is, and this is something we've been trying to do a lot more, and part of the reason why we've been so active this year is, for example, we're running angel list syndicates, right?
Right.
Or SPVs, special purpose vehicles on angel list, where you could, we'll put the deal up, or the founder will put the deal up on angel list. BU based in the US, all you have to do is just literally in 3 or 4 clicks. And I also do this, and sometimes is, just make an angel list account, 3 or 4 clicks. You can wire your money, and it's a few $1,000s at if you want. You could always do more.
Yeah.
Into a check that ends up becoming like 100,000 from BAN into a company, right? That we've organized. So I think that's an easy way for you to then kind of, once again, if you have let's say $50,000, not putting all of it into 2 companies, but
Yeah.
rather maybe 10 companies,
Right.
5K each, right, or something
Right.
like that. So I think there's definitely and I think this is where I would love to build something like that for Bangladesh. I
Right.
think we're still a little bit of a ways, because once again, SaaS for Bangladesh, right?
Right.
Or I think we're still a bit of a ways in terms of really productizing what we're doing locally. But I think we found platforms like Angel is very helpful for NRVs to
Right.
do cut relatively small checks, but be part of a larger check into band companies.
Got it. And now flipping this for entrepreneurs,
Yeah.
right? Let's say I'm a third year or final year college student. I'm excited to build things, change
Yeah.
the world, and make it a better place.
Yeah.
Right? How do I, or what would you advise me to do first before
Yeah.
I come to you? And then when I'm ready, I think I'm ready.
Yeah.
How should I reach you?
Yeah, I think my first piece of advice is probably to get some work experience at a startup,
Got it.
if you don't have that already.
Got it.
I think, I'm not telling you to go work for an MNC, because although you gain a lot of skills working at an MNC or a corporate, not all of those skills are directly relevant to building a startup. But there is no substitute, I think, for working for somebody like you, or Fahim Bhai at Pathao, or Wasim Bhai at Chaldal, or Savannah at Prava, or others, where they have done this. Like, they have built companies, they have scaled them, they have raised millions, if not tens of millions of dollars, and in some cases like Shop Up, hundreds of millions of dollars. There's just so much you acquire or you learn on a day-to-day basis, I think, working for such founders and getting into and I think spending a few years and kind of not only acquiring skills but building a reputation for yourself and building your network, right? I think those are all important things before.
So skills, reputation, network.
Yeah, exactly, right? So I think that's something that is very invaluable. Rather than unless you feel that you have done things already and you have those unfair advantages already, but very few 21-year-olds do have that, right? I think you have a lot of enthusiasm and passion, but then those things I think come over time. I think there is some benefit, but there's also the benefit of not waiting too long, because if you're, say, in your late 30s or something, I mean, you have your most amount of energy to really do things, I think, in between your late 20s and early or mid 30s, right? I think that's
late 20s, mid 30s, and then opportunity cost, right?
Yeah.
The older you get, there's
Exactly.
probably a big
becomes harder
opportunity
and harder.
cost that
Exactly,
you have to
so
consider.
there's something to be said for waiting too long,
Right.
But having said that, I mean, there's always anomalies, right? But I think there is something to be said for gaining experience.
Got it.
Now, if that's not what you want to do, or you believe that, look, I'm ready to start, I think, one, get started, build something. There is no substitute for building something.
Yeah.
Right. Build something that you could show me, you could send a link to, that we can really see. Get people to use it. Get people to use it and get people to pay for it. I'm not saying you have to do this for, 1,000 people,
Right.
but at least have, people who can vouch for your product and your solution, that it's actually helping them and they keep coming back to it. And in fact, if you were to take it away from them, like you have solved the problem for somebody.
Right.
And then now show me if you can do it for one person, can you do it for two?
Right.
And if you do it for two, can you do it for four? And can you do it if you can do it for four, can you do it for 16, right?
Yeah.
Can you scale it over time, even in a small way?
Right.
Then you might have the kernels
Yeah.
of a startup.
So is it a real problem?
Yeah.
And then is it scalable?
Yeah.
And then, okay, fine.
Yeah.
Got it.
I get a lot of calls from people,
I can imagine.
right? Because my phone number is listed, and they say, well, why don't you back idea companies? If you were to just back me, I guarantee that, this will become the best thing ever. It's all based on what you're telling me, right? But I think you have to kind of show me what you can do, right?
Yeah.
I think that's something I just encourage, would-be entrepreneurs to do.
Yeah. And then when the time comes, I can reach you via your phone number, which is listed on the interwebs.
Yeah, in my email.
How was that experience? Like, I'm just curious.
Yeah, I get a few calls. It's kind of because I think I get a lot of calls from somebody, for example, like, oh, I'm in, I don't know, Netrokona or Rajshahi,
Right.
and I have a business. I have a, maybe an air conditioning business, and I
Right.
need some capital. And obviously, we're not really built for that, right?
Right.
We're trying to invest in startups. And I think that's the challenge of this economy is, maybe for them, the current, maybe they can't get a bank loan. Right, or maybe they're too big for an MFI.
Yeah.
Those are problems that I think somebody needs to solve. Maybe a startup can solve that. I don't know if we're built to solve that, right? And I think that's something that I wish somebody was, right? Because those entrepreneurs need something as well, right? For them to grow their businesses. It's just that we're not really built for that, right?
Right.
Yeah.
Okay, so we've talked about what makes a good startup, why you would back them, what are some hot sectors. We also talked about, what aspiring young entrepreneurs should do. I don't have any more questions I want to ask you. Is there anything else that you want to talk about, Pam?
Yeah. No, I think this was a very good conversation, and I'm so glad that you're doing it. And I'm just really glad to be part of this. I think the main thing is I've had the last 4 years. I think has just been an incredible journey for me personally, and I think it's just been a great experience. Meeting people like you and getting to know people like you, and seeing how and okay, so maybe telling at like why did I come back to Bangladesh? Because I saw a country that, unlike Mongolia, the only way it's going to grow is through its people, right? And where I really respect someone like you or Elias is that you are the kind of people I had in mind. Like, there's no reason in this increasingly digitized world, the way you grow your economy ultimately is through ideas, right? And and the beauty is you can build something here and you could sell it to the rest of the world, and you're doing that now, and I'm just so excited to see what you're going to do next as well, and also just what's going to come out of the ecosystem, right? I mean, that's the beauty of this game or industry or whatever you may call it, is it really doesn't take much to start, and it could become very valuable sooner than you think. And I think you just have to keep going at it, and there's people like me, but there's also people like you and others that are willing to help. So reach out. So.
Yeah. We have to do a round 2 where I specifically ask you everything other than your day job, because I know you do a lot of reading. I think we exchanged some book recommendations at some point. We got to do a round 2 at some point, but actually I forgot, but we usually end episodes with just one question, which is, do you have a favorite quote or a maxim that you live by, something that keeps coming back to you and is kind of like a principle that you live your life by?
Yeah. I think there's a few. There's a few kind of quotes, but I think the one that I think I always come back to, like what my father kind of told me, is like, honesty is the best policy, right? That to me, like, that's always helped. I think that's always been, whether
makes things simpler.
Yeah, whether it's like talking to an entrepreneur and they ask me, what do you think of my idea or what have you. It's like, I think honesty is the best policy. So yeah,
makes it simpler. Fair enough.
Yeah.
Okay, awesome. Thank you so much. We have to do a round 2 here. I'm calling dibs.
Okay.
Thank you so
Sounds
much for
good.
your time.
Yeah,
And,
no worries.
Speak to you soon.
Awesome. Thank you so much. Cheers.